This is the MTPredictor weekly update for August 26th. Again, here's our S&P or ES, our S&P E-mini contract here that we've been tracking. And again, I've told you the last couple weeks here, this area, just put our analysis on here, we're in minimum wave 5 resistance. Right, and that's again an area where this market could correct. Right, typically you get a correction back to this wave 4 decision point area. Again, this is the weekly chart, so bigger time frame here, bigger picture stuff. And the reason we want to pay attention in this minimum wave 5, if we kind of go back, you see where this major decision point top was here. If we put the analysis on, that also was in this minimum wave 5 resistance area. This last swing before we got a correction, again right in the minimum wave 5 target, corrected back to the wave 4 DP. Even if you want to go back to the March lows of 2009, kind of the opposite end here, the pattern was a 5-wave pattern down, again into minimum wave 5. So that's why we want to pay attention here now. So if you are long stock or have a portfolio of stocks, if you own Apple, we can take a look at Apple. Just if you want to look at the weekly chart of Apple, look, here's Apple on the weekly chart, also in this minimum wave 5 resistance. So again, if you're long some of these stocks or a portfolio of stocks, it's time to protect your longs. Potentially take some profit off the table, buy your insurance, your puts, whatever strategy you're going to use, move your stops up, whatever the case may be, to protect yourself, because we're in an area and we're heading into a time of year, we get into September, October, November, that we can see some pretty volatile action, and we've had obviously some corrections and crashes during this period as well. Let me take a decision point off of the top of wave 3 here. All right. This would be your next resistance. If they do try to push higher, which they may, it'll be around 1433, 1433.50 area. And then the typical wave 5 resistance just above that, around 1480. All right, so we'll watch that. If you want to peek at the Dow on the weekly chart here, you'll see same pattern. These markets tend to track each other fairly closely anyway. Same thing there. If you want to look at the NQ, since we'll look at the kind of the big 3 here, NQ here. All right. So all in that minimum wave 5 resistance. So it's just a time we got to take precautions. If you're going to trade option strategies, against this, to bet that the market's going down, it's an area you can look to buy puts or do some type of short call strategy and so forth. All right, so we took a look at those. Let's showed you Apple. Somebody was asking me about Netflix, so I'm just going to just take a look at that quick. Netflix on the weekly chart here, little decision point buy signal. That's there's a target there at 90.88. Obviously a nice sell off there. See if it's bottomed, and it can rally a bit more off of this area from 60.57 up to 90.88. We shall see. If it does achieve the 100% initial risk line there at 68.34, then you can just put a stop to break even there. If anybody was long this, one of our clients anyway, 60.57, if you achieve that 68.34 level. All right, let's look at Well, the thing I really wanted to get to tonight is gold and silver here, because we've been looking at this probably 14 weeks. This thing has been in consolidation, right? Remember we had our little pennant here, our triangle formation. Well, we've clearly broken out of that now. Happens to be the silver chart on the weekly. Okay, so we've been anticipating. Remember, I said if they took this, got to close above this area to the upside, and now we just want to see them trade above that area on the weekly chart. Obviously, on the daily chart, your daily break has already happened, but the high of 3079. So 30, we'll call 3081, just to get above the 3080. 3081, 32, maybe some resistance, and then your next decision point resistance off of the last swing into this potential low here is up around 3920. All right, so the significance of this, it came right at the Fed minutes, right around that time, and the whole quantitative easing program still on the table, but unless the Fed sees the economy really deteriorating further, they're going to hold off on it. It's coming, and we look at the bond market. The thing that's happening in the bond market with the prices, having risen over the last decade, and interest rates obviously artificially low, again heading south over the last decade, and the Fed is going to eventually, again, some type of quantitative easing where they'll be buying more bonds from the Treasury. This is inflationary. If you're going to buy bonds, that's what you don't want to see, is inflation, because your bonds become worth less. So when we get a turn, and then we will, bonds, the trend that is intact now, where interest rates continue to go lower, that trend cannot continue forever. And when that turns, look out. And this is why gold and silver are responding this way. But again, the way we talked about this last week, it may be, I don't know, it could be the last opportunity to buy silver, below $30 an ounce, or around $30 an ounce now, as it's closed at $30.62 on Friday. And if it takes out 32, then we may be heading north towards that 50. So, with some stops in between here, obviously it's not going to go straight up. So I took advantage of the opportunity to go ahead and purchase some more silver myself, and something to consider. Again, this is a long-term play, 2 to 10 year, just depending on how soon things unfold in the bigger picture. But anyway, that's silver. We can take a look at gold, and again, you can use the gold chart to make your silver purchases. Again, the weekly chart of gold, same picture. We had that long 14 or so week consolidation into this little pennant. We've broken out of that, gotten a close on the weekly. The high there of 1672.70. If that high gets taken out, then that would confirm that we're going to head to the next resistance, and that's going to be right around the actually, if we want to go down, I wanted to go down to the daily chart on this. I just want to show you, so you can see the break on the daily chart, and this was the last swing into this low here, and so that would take a resistance area and put it right around just shy of about 1700. So 1690 and change. Alright, so again, same pattern. Obviously this one has the daily is a confirmed break to the upside. Weekly we have the close, and if the high gets taken out, then we should see more upside there, with the next decision point target sitting at 1830 area, 1832. Again, bigger picture on the weekly chart. Okay, if they don't take those highs out on the weekly chart here and kind of fall back in, then it's, you know, what we call a kind of a false breakout. We really do want to see them take that high out. That would confirm, you know, that they're going to move up to the next resistance level. So we'll keep an eye on that. And here's the daily chart of the Euro US dollar. Again, you can probably see the pattern here fairly clearly. I put the Elliott waves on here. We went to the typical wave 5 target, and when that happens, the tendency is you get a move back, rally back to the wave 4 DP, which would put the euro around 128.30, and then it will need to make a decision. If this area holds as resistance, then the trend, which was down prior, should continue. If they take it out to the upside, then they should erase this whole 5-wave pattern down. We can take a decision point off of the top of wave 1 here. And if they take out this wave 4 DP, then we'd be looking at around, that's right, around 34.36. All right, so this will be a critical area if we get up in the, if they can make it back up into that area, which is the tendency anyway. The dollar index, again, it kind of got hit. Here's the daily chart. It kind of took a hit, you know, with the quantitative easing talk, and that would devalue the dollar. Again, that target just shy of it, 85.19. So we'll have to see if we get this this little TS4 here. It can carry us up another leg, and then at least get to this weekly target at 85.19. So we'll see if we get some support here and get some buying coming in, one last leg up here, and then again market will need to make a decision here. If the dollar can take this area out, then you know, we'll see it rally further, and if they can't take this out, then we should get some more selling, or probably going more sideways. So we'll see. I think that's all I wanted to cover. I'll bring in the couple things of note here. I recently wrote an article for Traders World magazine called 95% of Traders Are Insane, and you can get that article at the website and peruse that. It's a pretty good read. Gotten some good feedback on it. You can read that on the little electronic magazine here, and just go through the rationale of, you know, why traders that are doing the same thing, making the same mistakes over and over again, are insane, and how to correct or stop the insanity. So you can check that out. Again, that's at the MTPredictor.us, and just look for, in fact, right on the right under the recent post, just look for 95% of traders are insane. Check that out. All right, we'll wrap it up here. I wish you all a great rest of your trading week, and we'll see you back all on Sunday.